FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And as we close out this week of trading, let's take a look at how many total trades did we actually end up getting this week. That way you could have a better idea as to really, if you just follow a strict set of rules or a strategy that's rules based, how many potential trades could you pick up if you're following, let's say, just the same pairs that I'm following on my list here. All right. So first of all, let's get into what happened on Friday. Now, Friday, I didn't trade Friday. However, there were still 3 decent setups that met all of the requirements that we could have traded if we wanted to. So let's go to those real quick. The first one was USD CAD. And this one actually had a type 2 setup. We're coming off of a peak formation low, so we're only looking for buys. As you can see here, we have the first leg coming down, hitting the bottom, going back up, getting rejected by the 200. Second leg comes down and gives us a railroad track. Also basically pins yesterday's low as well. You can see on the TDI here, we also make the pattern as well. We have the cross of the green and red line that confirms the entry as well. And then obviously the entry itself would be after the railroad track. And then we're just going up to the 800 EMA. That would give us 4-to-1 risk to reward ratio. So absolutely killer trade. And you see you're only risking about 9 pips, maybe 10 or so. But the risk reward ratio is there, and you could have taken it way higher than that, close to 7-to-1 risk to reward ratio, which is crazy. But that was the first good available trade that was there on Friday. Second one was on Euro AUD, and that was basically a type 3 setup. As we're coming off of a reset here, we're looking for sells only, right? So as we're looking for sells only, we get this. We get coming from the bottom, and we see price action basically get stuck here. Now, traditionally, we want type 3 setups to be getting rejected from the middle of the range. However, the 50 EMA here is acting as rolling resistance along with the 200 EMA. Now, we recognize this because this is what happens every time that the 50 and 200 interact with price. They act as support or resistance, or rolling support or resistance. So we know that there's a reason why this is not going to the middle of the range. So the pattern here is a star pattern that pins to the 50 EMA, and essentially the entry would be on the pullback candle. Any of these candles here would be a good entry for you. Now, depending on which entry you have, your risk to reward ratio here, you're risking about 20 pips. So you would have to take the reward all the way out to, since you don't have the EMAs in your favor, you'd have to look to the left, and you'd have to take it out to the structure of the previous days. So meaning basically the lows, like down here, if we start looking to the left, you see that there's structure here, here, and all through here. So those would be essentially your targets. And you could see we end up getting about a 2.5-to-1 risk to reward ratio on that. And you could see we went well below that. I mean, this ended up being, could have been a 5-to-1 trade if you let it run. Okay. But if you just go to structure, you're still getting, friggin' 50 pips almost, which is ridiculous on a 2.5-to-1 risk to reward ratio. Okay. The third trade would have been on Euro JPY. And so Euro JPY, the trade setup is this here. We're looking at essentially a type 3 setup that ends up happening in the New York session. Now, very similar to what we just went over on Euro AUD, is if you were looking at this throughout the London session, and again, we're still looking for sells, by the way, because we're still off of a peak formation high up here. So we're still looking for sells. But if you look at this throughout the London session, you could have essentially gotten in on this trade earlier in the London session because you would have been seeing the same behavior, meaning that the 50 here is acting as a resistance point or a rolling resistance to price action, because you can see it's preventing it from getting to right exactly to the middle of the range, right? So because of that, we know that the likelihood is that it's never going to, quite get up there to the middle of the range. So you'd have to take the trade solely based off of, where price action is. Now, if you're looking at this from the London session, when you just go back here to the London session, you do end up getting a star pattern here, which would give you essentially an entry, and it would have been something like this. A 13 pip risk reward ratio, basically to the 800, that would give you 2.2 to 1 risk reward ratio, which would have been a trade. Here's the problem: you would have ran into a situation where 6 candles into the trade, so 1, 2, let me just count this out: 1, 2, 3, 4, 5, 6. So 6 candles into the trade. So on this candle here, you're not in substantial profit, right? So because we have a rule, if you're not in substantial profit after 6 candles, you need to get out of the trade, because you're not, what you thought was a pattern is not really the pattern yet. They're not ready to go yet. So this would have ended up being basically a break-even trade, because when you got out of that candle there, you could see you're right at your entry point. So you would lose 1 or 2 pips or whatever, and then, that would have been it. But the entry itself would have been here, because you get an actual really good star pattern at the beginning of the US session. So we have the big bull candle here, and then 3 dojis followed by a big red candle. That's your star pattern at the beginning, that's pinning to the middle of the range there. And you can see on the TDI, we're coming back and we're crossing the red and green are crossing each other back down. You get a pullback candle, which is this candle here. That is actually your entry, that pullback. So the trade setup would have been like this. Still to the 800, you're still getting a 2 to 1 risk reward ratio. Okay. And if we let it run, boom, there you go. So well over, this ended up being well over 5 to 1 risk reward ratio, right? But you see where you could basically be taken out on your first try. But here's the thing that we went over at the beginning of the week is, if your directional bias is correct and this happens to you where you have to get out of the trade because the movement hasn't happened in the first 6 candles, it doesn't mean that the move or that you're wrong. It just means that the timing that you're wanting to do it at is incorrect, right? They just don't have enough people essentially buying at the time. They don't have enough contracts buying for them to do this move to sell. So they go up here, they tag it, and then they actually sell. So don't give up on the trade, essentially is what I'm saying, because if it's not going to happen in the London session, it'll happen in the US session. Okay, and in this case, it happened, in the beginning of the US session. So as long as the high or the low of the day is not taken out, you're still correct on your directional bias. Just wait for the pattern to show on the next session, and it should show, and that's when you can get into the trade. Okay, so there was a total of 3 trades, 3 really good trades that met all of my requirements to trade on Friday. Didn't trade on Friday, but those were the 3 trades that I found that were available to trade that met all of the rules that we go off of. So now, I typically follow, right, these major pairs of all the euros, pounds, and USDs. Ends up being about 15 to 16 pairs. Okay, I don't trade them all. Obviously, as I've showed you this week, I don't trade them all. It just depends on which one shows me, correct pattern and things of that nature. So far this entire week, that I've shown you everyday videos of, there's about 20 trades that were available to trade this week that met literally all of our requirements, that were really good trade setups, that weren't missed, they weren't half-assed trades. They were really good trades, all providing good confirmations, going with your directional bias and everything like that. So there are definitely trades out there that you can find every week. If I found 20 of them this week, in 1 week, you can find trades out there that meet all of the trade requirements. And so the point that I'm trying to make is that you don't have to trade like 10 trades a day. You don't have to feel like I have to trade today. It's very simple. It's either the system that you're trading, whatever that system is, it's either going to provide a trade for you or it's not. And if it doesn't provide a trade for you that day, that's perfectly fine. Just wait for the next day. Because as you saw, some days maybe 3 trades, other days like on Tuesday was 5, 6 trades. Every day is going to be different, right? But just go in every day ready to take a trade, but the trade has to be there for you to take the trade. You just don't want to take blind trades. Okay, so this is why it's important to have a system in place that actually works, that you've back tested. Okay, so 20 trades in a week, guys. So the trades are out there. The trades are out there for you. You just got to be patient and wait for them to show. But they're out there. All right. So I hope this entire week, guys, I've shown you the different trade setups, the entries, the exits, why I took the trades. I hope this week has been provided value for you in that sense. So if you guys let me know, what trades did you take on Friday? Have you found these videos this week useful? And if you need any help, just let us know or join us on FXN Plus, where we break the stuff down every Sunday for like literally 2 hours. We break the stuff down. I give you my peak formation highs and lows, everything. I give you the indicators, all the stuff. But anyways, guys, I hope you had a great weekend, and look forward to talking to you guys next week. Thank you so much. Have a great rest of your weekend.